Hey Kyle, this is Ryan with TrendLizard.com. Hope you're doing well. Thanks for sending me the email with the three tickers earlier today. I want to take a look at some of these guys. You found some really nice stocks, and I think one's a mutual fund. But we're just going to go through them all and take a look at what we have here and see what we can figure out about their Elliott wave pattern. So we're going to start here with CIG. It was incepted back in 2000. Heck of a pattern here. Really beautiful stuff. Nice find. Not sure where you're finding these stocks, but man, they look really good. Good finds for sure. CIG started a long-term uptrend in 2002 that carried it into its 2013 high. Went from a couple pennies up to about $8 in the 2012 high, and since then really took a dive until early this year, at which point it's really reversed its course and looks a lot better off the 2016 low. So good stuff. This advance is absolutely a trend, no doubt about it. Beautiful 5-wave advance. Every up leg's a 5-wave move. This is just telling us that overall this is a really nice trend. The pullback off the 2012 high looks like one big counter trend move. And it looks like it could be over and that the good times are going to return off the 2016 low. That is absolutely the potential. There's a ton of potential for this move to continue significantly higher, regardless how we look at it. So I'll explain a little bit more what I'm talking about as we go from there. But let's go ahead and zoom in and take a look at the pullback, or at least the sharpest portion of the pullback off the 2014 high. So this looks like the ending pattern to the counter trend pullback that was in play off the 2012 high. It's definitely one sharp move that is now complete, no doubt about that, and a really nice recovery has emerged that has nearly tripled the value of CIG over the course of this year so far. So it looks really bullish. This has the potential to be a major low that turns into a much larger advance. So I can see why you picked it. I think this is definitely a trade-worthy opportunity and something I would strongly consider buying if I was you. But let's go ahead and zoom in a little bit closer on this 2016 advance to see if we can get any more information out of it. So here's what we're looking at. It is a trendy, at least the start of a trendy move. Looks like the start of a trendy move off of the 2016 low. The first leg is a nice 5-wave advance. Counter trend pullback here, and up it goes again. So of course, anytime stock more than doubles over the course of about a month, like it's done over the last month, it's going to be hard to buy it with a stop level that's super close. So unfortunately, the closest stop level that you could place right now that would have any kind of significance would be at $1.90. So obviously that's not super close. The stock closed at 263 today, so that's about a 70 penny decline to get down to the stop level. Probably further than you want it to be. Nevertheless, that's as close as we can put it and have any significance behind this stop level. So if you already own it, this is where I would put the stop level. If you don't own it, one approach could be that you wait for a pullback, which probably isn't too far off. Doesn't need to be anything special, just something a little bit larger to suggest that this leg is ended and it's setting up the next up leg. And once it does that, you would have the opportunity to use a much closer stop level, and I'd be more than happy to help you place that stop level once that pullback has taken place, and I could show you where you could do that. So again, if you don't own it yet, I would consider waiting for a pullback. That way you could use a much closer stop level. But if you do own it, the closest level you can use is $1.90. So this is the bullish potential. I want to show you one other idea just to kind of drive home a point that if this is completely wrong and I've completely missed the spot on this being the start of a new trend, it still looks bullish, and here's why. So if we go back to this chart and say, okay, this big sharp decline off the 2014 high, which is a trendy move, it should be if it's the end of a counter trend pullback, say this is the start of a new downtrend. Even if that's the case and a larger counter trend recovery is underway here, even if that was the case, it would still look like it was going to head higher before a high occurred and the trend resumed down. So not to muddle the analysis in any way, just to say under either scenario, even if the trend did not turn up in 2016, even if this was a counter trend recovery, it still looks like it would head higher before it headed lower. So a counter trend recovery would be expected to move up to 350 up to 5, somewhere in this yellow area before it ended and the downtrend resumed. That's not what I think is happening. I think it's probably the start of a new trend. But that's just kind of my disclaimer to say, even if it is a bearish long-term outlook and we're completely wrong about the bullish long-term outlook that I see, it still looks bullish in the near term. So I think it's a good buying opportunity. The key level to keep an eye on is $1.90, and you can just trail it from there as the advance continues. So I hope that's helpful, Kyle. I will get to your other two tickers in just a moment here. Thanks.